ready any second now. All right, cool. Looks like we're live. All right, so check this real quick. All right, dude, you said you got hurt by gold. Yeah, we'll analyze gold though, but I'll see what happened there. I know a lot of people were trying to scalp, gold and indices. Some people did very well. Some people got burned. I mean, it just really depends. It would really depended on how you traded it. If you were like actually using strategy, or if you were just like hopping in. Because I know Sandeep, he was using the. Is he even in here? Let's see. No, so Sandeep, he was using the pivot strategy. So that was all he was using the whole time, and that's pretty much how he locked in. Like all these profits.
That's when he thought he was done.
He locked in. Like he started with 9,000 this morning, and then he ended up with 22,000. Let me see if I got the first post for him. So he started off like super. Let's see. Yeah, actually, Sandeep started at 6,000. He was on a. I want to see where his total account was. So his total account when he started was. And where did he post it at? Let's see. Might have been over here. It's in his chat real quick. Actually, I don't even know if I posted it. Did I post it on the group base? I know it's on the Instagram. I just don't know if it's on the let's see. Because I know he sent it to me. We got some signals. It's just US 30. It's opposite signal. So this would probably be a good buy if we for that same strategy. Yeah, let me just pull this up real quick. Yeah, no, it's on the IG. Aaron. Is Aaron over here with his foot fetish? Where you at, Aaron? Fucking Aaron.
What's up, bro?
What up, man? What you doing?
Nothing. Shit, just chilling right now. Just looking at these. Oh my lord, a big spider. Oh shit, hold on.
Yeah.
I'll meet you real fast, bro. It might get a little loud. Hold on.
All right, hold up. Let's see. Yeah, so this was like this was Sandeep's his profit this morning. So he started at only like 8,000 in profit, and then going over to today to my most recent post right here. That was at 7 a.m. This was about like 6 hours later. Let me just turn off the volume. It's too loud. Yeah, so right here you can see that he was up. He went from 8,000 to 22,000, and all he was doing was running the pivot strategy, and that's the same thing that I went over last time. It's really easy. But he was like on the 1 hour chart, I think. So he was literally just scalping every entry. So we scalped like this entry right here. He took this, and then he won that trade, obviously. And then he took this one again right here. He was like doubling up his trades. Like what he was doing was super risky, but he trusted the strategy. So every time he took a trade, he like literally hit the jackpot. Like he won there, he won there, he won there, he won right here too. But he was actually scalping it. So like when he went into profit, he would close it out, and that's why he wasn't really losing that much. I think he lost this trade. So he lost like one trade, but he still ended up with like 22K for the end of the day, which was fucking crazy. I mean, like that amazed myself because I was like, damn, I thought I did well hitting like 12K in one day, but this dude was hitting 22. But there's crazy volatility in the market. It's totally possible to do it. He was trading both ways too. Like he was taking buys over here, And then he took sells right here too, and he was literally just hitting the market back and forth like all day, just literally taking every trade, which it's possible, it's doable, but you have to be super focused. Actually, I don't know if he was doing the 1 minute. He was maybe doing the 5 minute, because the 1 minute seemed like it was moving a little too fast. I mean, who cares? Who cares and who knows? He made a ton of profit, so that's all that matters. But yeah, if you guys are still figuring out like which strategy to use, I always recommend using the pivot strategy, because it's super simple. Like you can see here, literally you can take all these trades over here, and they would be like great trades. But yeah, let me get back to what we were looking at. See, no, I took a signal for gold. I should have took profit when I hit. Damn, this dude hit. Did you post your profits, bro, in the premium? Let me see. I haven't seen you posting all day, bro. Let's see. It's cool. He got burned by the sun so many times. What do you say? Razik said IML does it to you. Oh man, it's all bad. Yeah, I haven't been active in the chat, but I haven't seen you post all day, bro. You're usually pretty active in the chat. I guess you were too focused. Oh, he said he hasn't yet. You've been too focused on gold, huh? It's all good. But yeah, so if anyone has any questions, feel free to put them in the Q&A, and then we can look over them. Otherwise I can just go over the pretty much every pair if you guys want me to, or because I'm not gonna look for trades until 6. It's too early. There's no point in me looking for trades now that I'm gonna plan on taking, because a lot of things can happen within those two hours or so. But I'm gonna go over the strategies, the indicators. I know there's so many people here. But then I'm also going to go over, I'm just going to analyze each pair, because I don't think I have the current zones drawn for every pair right now. I don't think we have anything active right now aside from GU. Let's see. So I mean, GU is technically active, but I got out in the morning when it hit TP. So in the morning it hit TP1 and then hit TP2 for 50 pips. So if you guys didn't get out during that time, I mean, you guys are in a tight position, because you can see it pushed up at least like 70 pips. So there was like ample time to get out of this trade. But it's now negative. So the problem with this is that it's going to consolidate. It's going to go sideways until it decides the direction. Because, with those crazy movements today, there's going to be some sort of correction. The correction could literally go either way. So right here, it's just going to consolidate a bit. And then the problem with this is that it could shoot up and, in our direction, or it could shoot down. We just don't know what's going to happen until something actually happens, because it's probably just going to consolidate for the rest of the week, if not spike in a direction. We just wouldn't really know. I don't know if there's any news today. I think that was it for the news. Yeah, I think that's about it for today. But tomorrow's Friday, so generally the market's going to be slow anyways, because the market's the trading week's over for most people. So we'll follow it, and then if anyone else is still here this trade, we can reanalyze it, see what happens, but it doesn't seem like it's going to move very much until next week. All right, so I'm going to start going down the Q&As. If you guys have any questions, you guys want me to go over any specific strategies, any specific indicators, any specific pairs, like literally anything trading, go ahead and put it in the Q&A, and then I can go over any questions. But right now we have 2 questions in the Q&A. I'm going to go check that right now. So Andrew right here is asking about the US dollar versus the peso. So let's pull that up real quick. I don't have it on my watch list because I don't trade it, but it's a good pair to trade. I mean, especially with the pivot strategy. I personally just don't like trading. I don't like trading exotics, because look at the spread, dude. It's 151 pips. It's like really hard to get out of that spread. And then, I mean, but the trades actually hit though. So I can show you right here. Like we have a pivot entry right here where price came down, it retraced up, rejected. We got a sell signal. So whoever took that trade, if they did, would have won obviously. And then same situation right here. Price came down, retraced up, rejection, sell signal. It's another win right there. So these pairs actually they do hit, but it's it's just a matter of time before you can find those entries. And me personally, I just don't like I really don't like trading exotics very much. I used to, but not so much anymore. But yeah, so back to Andrew's question. Andrew's asking USD peso to 22. So let me just put that down somewhere. See, the problem with this is that this was affected from the news today too, because it's paired with the US dollar. So there's going to be manipulation here. Normally, there's not as much manipulation with the exotic pairs because they're not traded as often, but there's a lot of heavy stuff going on with the US dollar. So let me just put in the parameters that he wanted, 22.4090. Yeah, I can see that happening. But let's go back and let's deep dive into this. So basically, I'll show you guys how I analyze a chart before I actually do anything. So generally, when I analyze a chart, first thing I do is I determine where the zones are because I want to know where price is rejecting from. Obviously, you don't want to trade in those specific areas. So in order to do that, I pull out the K2SR V2 indicator, and the zone's already drawn for me. So basically, once I have that, I go and I draw my Aaron, what you doing? I'm gonna mute you, bro, because you keep making weird noises. I'm gonna so basically like I was saying, first I pull up the K2SRs and then I look at where the zones are. So basically I can see all these zones right here. And now that I have them on the chart, I'm gonna go ahead and just draw my own zones over. So basically I just draw my zones over the, the actual K2SR zone. So the thing with the exotics is I don't really trade them. So generally I like to have about a 20 to 25 pip gap between each zone. So say if this was 25 pips right here, then I would create a different zone up here. But I'm not familiar with the peso because I don't trade it. So I'm just gonna draw basic zones around the area. So we have a zone up here. We have a zone right here. And this is subjective. You can put the zones wherever you want. You can leave the K2SRs on the chart for you. But, me personally, I like to have clean charts. So generally, I'll just draw my zones on here, and then I'll hide the K2SRs later because I just want to know where price is going to be rejecting from. So say if I'm taking a buy, like a buy position, obviously I don't want to take a buy if price is getting near resistance because, what happens when price gets near resistance, it generally rejects off. That's exactly what's happening right here. Same situation right here. When price hits the support, what happens from there? It usually bounces off. So it bounced off right here, hit the resistance again right there. It bounced from there, and so on. You can see right here that price generally goes from zone to zone. So once I have these lined up, I'll have the K2SRs, and as you can see right there, it looks a whole lot neater. So just looking at that from there, you can see that price generally goes from zone to zone. So price goes down, it goes up, rejects off the zone, goes down, rejects off the zone, comes up, rejects off the same zone, comes down, rejection right here, and then it breaks. And then it does the same thing over and over again. So generally right here, if price was to break this zone, then it would probably test this zone right here, and price can go one of two ways. It can either continue on up or it can reject off it. So that's how you guys can analyze, the direction of price. So once I have the zone set up, then I turn on the K2 momentum indicator. And then once I have the K2 momentum indicator on, this is going to show me the direction of momentum. So you can see right here, we had a buy momentum right here, but you can see it was at resistance. So what it did was it came up, tested it, came down. It tried to push up because the momentum was still up, right? So it came up, rejected, came up, rejected, and then it broke past it, created a new resistance right here. But as you can see right here, once we got a sell momentum signal right here, price came down, tested the next zone right here. So right here, same situation right here. You can see price test it, then it comes down. Test it right here, is coming down as well. So, the same pattern might appear again right here where it'll just consolidate a little bit before it shoots above. So Andrew's asking if, price will come up here to this specific price point. I think it will eventually, but, the odds are probably not anytime soon because, just looking at the chart right here, it's exactly what I mentioned. Like, price came up. It's exactly the same actually. So it might reject from here, go sideways, then it might test again before it might come down. So once it tests this point right here, it could either come down and like pretty much range within the zone like it did right here, or it could break the zone and shoot up to the next zone. So if that happens, then yeah, it'll come and hit, your price point that you're looking for. But it's kind of a hard call right here, especially since it's Thursday and the market volatility is going to die down. So on top of this, I could turn on the K2 pivots, and you can see right here that it's actually in a downtrend. So price broke the trend right here, and when that happens, like one or two things can happen. It can either correct back downwards, or it could shift to an uptrend. But the problem with this is that this is a huge candle. So you can see this was a manipulated candle. Like something happened here that caused price to spike up like that. Normally it doesn't spike up like that. So you can see right here, these normal candles are only about 100 pips. Look at this big candle right here. This is like 400 pips. So it's 4 times the normal candle move. So obviously something happened here to cause this to spike up like that. So, I mean, me personally, you know how I trade. I don't like to trade speculation. Like I only like to trade when I know it's going a certain way. Like right here, I saw the sell, it's below it was in the direction of the trend. I would have taken the sell right here. Same with this situation right here. It's in the direction of the trend. I would have taken this as well. I don't like taking, spikes in price, because the problem when you see spikes in price, like you see this big spike right here, same thing right here, big spike right here. What happens? It has to fill the gap. I mean, it doesn't always have to, but more times than not, it'll fill a gap. So, you can bet on it coming down, but how sure are you that it's going to come down? The trades that I take, I like trades that are almost for sure, almost guaranteed. So, that's why we have such a high win percentage at K2, because I'm very careful with my trades. I don't just take trades, based on my gut or what I think. I take trades based on what I see on the chart. And, me personally right now, I just don't see anything with this pair, because like I said, it could go either way. It could either go down or it could go up. So until price breaks above here, then I'll take a buy and I'll ride that up to the next zone. But me personally, I wouldn't take it down here, because last thing you want is to be in this trade for a buy and then it retraces all the way down here and you're in a huge drawdown or you get stopped out. But that's just the way that I analyze it. You might have analyzed it differently. So there's no wrong way to analyze a trade. If there's something that you've seen, it fits your requirements and the way that you trade, then maybe that's a good buy. But me personally, I like to be extra careful. So I'm probably gonna hold off on this for now if I was personally taking the trade. But yeah, let me see what else is here. Aaron, who is that? Is Aaron here?
Yeah, I'm right here, bro.
Who's that joined the chat?
I have no idea, bro. Whoever it is from the UK.
Yeah. Sounds like your friend Dylan, bro. Dude's still hating.
Don't start.
He's hating because his company failed. Everything failed for him. So obviously he wants to come here and hate. But whatever, I don't care. All right, so let's just get back to this. All right, let me go back to what else is here. Andrew said he's in profit. Yeah, so you're in profit, but like I mentioned here, this thing shot up right here. But the problem with that is that, it could either, like the worst thing you want is that you're already in profit right here, and then it comes down, and then you lose all your profit. Me personally, I'd probably close out of it, and then I'd probably just re-enter once it reaches up here. But I don't know. It's really up to you how you feel. If you think it's gonna keep going up, go ahead and hold on to it. But me personally, I like to be very careful with the trades. But okay, let's keep going through. Let's see. Angel said, I saw different indicators for scalping indices on the site. Angel, which indicators did you see? Because I only use the K2 indicators. I don't use anything else. I'm not sure if you're talking about a K2 indicator or if you're talking about something different. Yeah, I don't know if you could chime in. I could answer your question, but I just need to have a little more detail. But yeah, I'll skip your question for now, Angel. But just put it in the Q&A, and then I'll get back to you once I see it. But when I personally scalp, I only use the pivot strategy, so I don't really use anything else. I mean, you can use other indicators, but me personally, I don't use any of those extra stuff. But okay, so let me keep going to the next question. Dot said, does a pivot strategy work on Forex pairs? If so, what time frame is best? So Dot, if you're familiar with, um, the pivot strategy, it works on all assets and on all time frames. So if you go here, um, where it says K2 pivot strategy, it has an explanation for pretty much everything, how the pivots work, scalping, intraday, and swing trading. But it does work on Forex, that's what it's based on. But obviously there's been a lot of volatility with indices, and that's why it works really good on indices now because, in order to trade the pivot strategy, it's based on momentum, like with every other strategy that's with K2, but that's strictly on, momentum for that specific time frame. So in order to trade it on, whichever time frame you want to trade it on, you would have to, you'd have to make sure that there's volatility in the market. Like I was showing right here for the peso. So for the peso right here, you can see that price. This is the pivot strategy right here. So basically, price comes down. You identify the trend. So obviously right here, price is trending down. And then you see a retracement, rejection off the K2 pivot like area, and then you get a sell signal. So if you have that, you could take a sell right there. Same situation right here. I'll put the actual requirements here just so you can see. I don't know if you're new here, Dot. I haven't seen you here before, but this is the K2 pivots strategy. Basically, so for one, you need to identify the trend. Oh, Parmon's here. Yeah, Parmon. So I'm just gonna explain it right here just so you guys can see. So first, identify the trend using K2 pivots. Two, identify a retracement pullback. Three, identify a rejection off K2 pivot area. And lastly, confirm valid K2 signal. So lastly, once you have all that, you can enter on the open of the following candle. All right, so that's the K2 pivot strategy. Pretty much right here, first identify the trend using the K2 pivot. So let's rewind to this point in time because this would be considered an entry. So right here, you want to identify the trend. In order to do that, you want to make sure that price is below the K2 pivots. The pivots are all angling in the same direction. So it's kind of hard to see here, but if you look closely, you can see that all the pivots are angling downwards. Lastly, you want to identify that, the pivots are spread out. So right here, you can see that they kind of cross over, but you can like look back a little, like a few candles back, and you can see that it was actually trending down before it started crossing over right here. So just looking at this right here and zooming out, obviously just looking at it from a bird's eye view, it's obviously trending down. If you wanted to confirm that, you can use the channels and then you can draw your own trend line like that. But obviously, this would confirm that it's in a downtrend. So once that first requirement's met, you'll identify a retracement or pullback. So basically you can see prices trending down, and then from right here, it retraced all the way up to here. So that would fulfill requirement number 2. Third requirement, you want to identify a rejection off the K2 pivots area. So basically, you just want to see, a nice rejection, like a rejection wick off this entire area, like where the pivots are. Like obviously you don't want to see a rejection up here because the price is way past the pivots, but you can see right here, price was crossing the pivots, and as it crossed it, we got a nice rejection right here. So after that, you can see that the third requirement was met. So first requirement, identify the trend. You can see right here, price is trending down. Identify retracement. Price retrace from this point right here. Third, identify rejection. So rejection up here. Lastly, confirm a valid K2 signal. This is a valid sell signal right here. So once all requirements are met, you can enter on the open of the following candle. So right here, you can enter in short position. And then if you were to let this run, you can see right there, hit TP. And that's pretty much the strategy. Super simple. And it works, it works on Forex, it works on indices, it works on Bitcoin, it works on literally anything. You can use it on any asset. There's no specific asset that it works best on. It works the same on all of them. It's based on momentum. So as long as there's volatility in the market, you can use the strategy. Because basically what you're doing is you're trying to catch the dip. So you can see prices trending down, price dipped up, and then you got the momentum swing back downwards. you basically just ride the wave back down because it's going to come down regardless. And it works on all time frames. You can use it on the 4-hour, the 30-minute, the 1 hour, the 10-minute, 5-minute. It's really up to you. But obviously, if you use it on the higher time frames, you're going to have higher accuracy. So it just really depends on your preference. But there's no there's no specific way to trade it. It just depends on how you trade specifically. But okay, so let me go to the next question. Lady Shawn is asking, how do I get the K2 indicator on my trading view? Shawn, so I'm not sure. Do you have access to the K2 indicator? So if you do, you just click indicators up here, and then you go to invite only scripts, and then you'll have all the K2 indicators right there. You have to have an access. I think you have access to the K2 strategies, right? So if you have an active subscription to the K2 strategies, then you can pull up the indicators. But if you don't have that specific subscription, you only have a subscription to the signals, you're not going to have access to it. But I think I remember you have the strategy subscription. So if you're looking, how to get the indicators, you that's pretty much how you find it. It's real simple. You just click indicators, go to invite only scripts, and then the K2 indicator is right there. But yeah, okay, so next question. Let's see. All right, so let me skip that question. All right, so check this real quick. Let's get over here. Sorry, I'm looking for something in the chat real quick. All right, cool. So Poulad's asking, how do you go about trading Bitcoin? So me personally, I don't trade Bitcoin, so I can't really, give you a description how I trade it because I don't trade it. But you can use all the K2 indicators on it as well. The same strategies work on Bitcoin as they do on Forex, as they do on indices, as they do on commodities. It doesn't matter. As long as there is volatility in the market, you can trade it. So here's Bitcoin right here. Same situation. If you wanted to use the scalping strategy, you can see that price came down, it came up, and then obviously price was in a downtrend right here. So let me just go back to the last pair. I'm just gonna copy because I don't want to retype everything up. Oh, crap, how did I get there? I was on the pistol. So let me just go back over there. So I don't have to go and type all that up again. So let's copy this. Yeah, let's go to, what was I again? Sorry, I was at Bitcoin. Mine's all over the place today. All right, so let's take everything off the chart. Same requirements. And I'll just replay it here because this is a valid entry. Well, there's a bunch of valid entries. There's one here, there's one right here, there's another one right here. So, we'll start with, I guess we can start with this one because this one's kind of iffy since it wasn't really trending yet. But, just looking at this one right here, identify the trend using the K2 pivots, prices below the pivots are angling down and they're spread out. So obviously this is a downtrend right here. Requirement 2, identify a retracement. You can see that price was coming down right here, then a retrace from this point. So there's requirement number 2 been met. Last requirement, identify a rejection of the K2 pivot area. So you can see price came down, retraced, rejected right here. Requirements 1 through 3 have been met. For the fourth requirement, confirm a valid K2 signal. So right here we have a valid sell signal. Since all those requirements have been met, you can enter on the open of the following candles. Right here, you can enter a sell. And then if you were to let that run, wait, actually the stop loss is too tight. I don't trade Bitcoins or I don't trade cryptos at all. So I don't know, what's a good number here, but generally I put out the previous swing. So the swing would actually be up here. Let me just rewind this because this looks like it's just too close. Like, let me see where it was set right here. Yeah, see, this isn't even the swing. The swing would be way up here. I mean, this could be a swing right here too, but this is super close. I don't trade Bitcoin, so I don't know if if this is a big distance or not. But going according to the rules, you're supposed to put your stop loss at the previous swing, which would technically be right here. So price came up, swung down, and it swung up right here. So this would be a swing down, swing up, swing down. Technically, this would be a swing up, but it looks too close to me. So I would put it to the swing right here. And then we trade that at a 1-to-1. So if you were to run that trade, it would have hit TP. But again, I don't trade Bitcoin, so I don't know if this is a big stop loss or not. But if you wanted to follow it as it's supposed to be traded, generally you would put it at the previous swing. So let me see what it actually looks like. So if I back up right here and I use the short positioning tool, it's actually putting the swing way up here. So I don't know if this is too far. This is like, what, 700 pips? But it looks like if it played out, it'd still be continuing. So it looks like it might even still be dropping down further. But with Bitcoin, the reason why I don't trade Bitcoin is that it's all speculation. There's no specific way for you to determine, how it's moving, because the thing with Bitcoin is that it's not established like currencies or commodities like gold or indices. There's no specific direction. Basically, whoever has the most Bitcoin, if they want to go and push the market, they can push the market. It's different compared to currencies. Like for currencies, only the banks and stuff can push it. But whoever has the most Bitcoin could push the market. It's like a pump and dump stock. And that's why I don't like trading it, because it's really hard for you to really gauge, how it moves. And generally the way that Bitcoin moves is that it moves very slow. So you might not even see movement for like a whole month or so, or like barely some movement. So if you can see right here, obviously there was a lot of movement during COVID, but if you go right here, see in July, there's literally no movement. The market was flat for a whole freaking month. Like it only moved like about 100 pips. And then you see here, it just starts moving like crazy. That's why I don't like trading Bitcoin, because it's really hard to determine and to, analyze, the direction of price if you're trading it on a longer term. But it looks like it's going to keep dropping. So if you have any Bitcoin, me personally, I probably wouldn't hold any right now. But yeah, let's keep checking. Let me keep going down the questions over here. Sorry, I'm just looking down the chat. I don't see anything I really need to look at. I'm going down the Q&A, guys. So if you guys have questions, put them in the Q&A. And then I'll go over your questions, because I'm just looking at the chat to make sure anyone put any questions there. But I'm not really looking at the chat because it's too like there's so many things on there where I can't really follow. But Parmon asks, how do you recognize a valid entry? So yeah, if all requirements are met, then that'd be a valid entry. That's the only way there'd be a valid entry. And that's why, a lot of people like this specific strategy, because, using K2, it's all objective. There's no subjectivity here. Like if you're trading price action, the thing is, what you see on the chart is different from what someone else sees. You guys don't see the same exact things. But with the K2 strategies, there's a specific checklist and requirements that you have to follow. If these aren't met, then there's no entry. So if I see an entry, you should be able to see that entry too. Vice versa, if you see an entry, I should be able to see it as well. There's no maybes. Like, there's going to be, if the requirements aren't met, then they're not met. But if they're met, then there's a valid entry there. But let me keep going down. So Dot said, I can only see the gaps in MT4. How do you see gaps in trading view? The gaps are based on your broker. So, depending on how good your broker data is, that's how you'll see, where the gaps, that you'll see that there's no gaps. So I'm not sure which gaps you're talking about, but I know I've seen like on Hugo's Way, if you're using like a cheap broker or like an unregulated broker, their data is not going to be on point. So, if you're following their data, you can see that the numbers are way different. So if you like look at US 30 and we're using Oanda data, which is a regulated broker, you'll see that the numbers differ from Hugo's Way, CoinEx, or whatever broker you're using. And that's why I don't follow that data. I always follow the official US regulated data for those brokers, because they have the up-to-date, the official data. But yeah, if you follow Oanda or Forex.com, you can see that there's not really much gaps. because the data is always up to date and it's always accurate. Yeah, I don't think I've seen any, I don't really see any gaps here. So it just really depends on your broker. It's not something that's, it's not MT4 based and it's not TradingView based. It's based on the specific data. Because, so let me go to, all right, so if I'm looking at US 30 right here, and I take off all the indicators, because there's different data too. So you can see right here, I'm using Oanda data. There's no gaps, right? So if I go to, let's see, US 30, if I go to like, I'm gonna try to figure out what's, I think currency.com's fine. Yeah, there's no gaps there either. So you can see there's gaps right here for this specific data, which is TBC. I don't even know what that is, but you can see that there's a huge gap right here. It's all broker based. So you can see there's gaps right here. There's gaps right here. There's gaps like all over the place. So, if you're following that, you'll see gaps. But if you're trading on something that is US regulated, like Oanda, there's no gaps there. So it just really depends on your broker. It's not, it's not platform based. It's broker based because everyone has different types of data. But yeah, okay, so let me if let's say Osprey FX is a little bit off. Yes, like most of them are usually around the same ballpark range. It's just, if you go to, I'm trying to think of a really bad broker. But if you go to like the really, really bad brokers where like it's like ones that you've never heard of, then that you'll see a lot of gaps there and it'll be like super off. Price data will probably be like, a couple minutes off, a couple seconds off, compared to using, a legit regulated broker. But I mean, you gotta do what you gotta do. If that's the only broker you can use, then, by all means, you gotta like figure out a way to make it work. But okay, let me keep going down. All right, so Angel said, never mind about my first question. Could you please look at AutoCAD? So let me pull up AutoCAD real quick. I already have my zones plotted here. So, but I'll show you guys again. So let me just plot new zones here since, a lot of people want to see how do I analyze charts. Basically, this is a naked chart right here. There's nothing on the chart. What I do first is I open the K2SR indicator. So when you open the K2SR indicator, it plots all of the points of rejection on the chart. Basically, these rejection points are created if prices come down and it's tested this more than once. It's tested this specific price point more than once within the chart data. So you can change the data, as far back as you want. I have it set back to 100 candles, so that's 100 4-hour candles. Because I trade intraday. Like I don't want to know what's going on, 10 years ago. I'd rather just know what's going on recently because obviously, price is going to respect those price points. So once I have the K2SR indicators up, what I do is I draw my own rectangles over them. Well, basically my own zones, because sometimes these zones overlap. So if they overlap like that, I'm just going to create them into one big zone. And generally, I like about a 25 to 20 pip gap between each zone. So if these right here, you can see this is only 4 pips away, right? So obviously, I'm not going to make 2 separate zones. I'm just going to create, one big zone right there. So right here, I'll connect these together. And this is going to give me a good understanding as to where not to trade. Like obviously, if you're trading where these zones are, odds are price is going to reject off on. And I'll show you again right here, like I did earlier, what I mean by that. So here we go with all these zones. All right, cool. So once I do that, I take off the indicator so I can make the charts look clean. And there you go. It's brand new. So it looks all nice right there. You know exactly where price rejects from. And like I mentioned, generally price, it'll go and it'll test the zone and then it'll reject off it. So you can see right here, price came up, rejected off this resistance, came down, rejected off this support, it shot up, rejected off this resistance, and price pretty much just moves from zone to zone. So if you're taking a trade in a certain direction, you obviously don't want to trade, once it gets close to the zone. So right here, obviously, if you take a buy, you probably want to exit before it touches the zone because odds are it's probably going to reject right off it like it did right here. And then as price came over here, you probably would have wanted to exit right here because odds are it might reject off here or it might break below. The thing with these zones is that they're critical because they can push price one way or the other. It just depends on where the momentum is. So like if you took this trade right here and you took a sell, you probably would have wanted to exit right here for like 60 pips. instead of risking it rejecting off and going to the negative if it shot all the way up. But this is the first step. So once I do this, I'll understand that price is within a zone. So basically, in this situation right here, I probably wouldn't trade this because it's stuck between these two zones right here. So what might happen is price is going to just range between these zones until it breaks either above it or below it. And you can see that this happened right here. You can see right here, price came up, tested the zone, and it came back down. Rejected off here, came back up, rejected off here, came back down, rejected right here. And it just pretty much ranged sideways. So in order to determine, the direction of price, you're going to turn on the K2 momentum indicator. So once you turn on the K2 momentum indicator, you know exactly the direction of momentum. So you can see right here, we had a valid sell signal, price came down. So generally it broke below the zone and then it tested this zone right here. Before rejecting, we got a buy signal, momentum swung up. So the thing is, price rejected off this point. If we get a sell signal, like we did right here, odds are price is going to reject. It's going to come and test the zone down here. And then it could go either one or two ways. It could correct back up, or it could break through the zone and shoot down like it did right here. Odds are if we don't get a sell signal, because we haven't gotten one yet, price might come down slightly. So it might come down a little bit, test the zone right here. And then if we don't get a sell signal, it's probably going to shoot back up. And then if it shoots back up, then it could shoot even farther. But that's like a basic analysis of a specific pair. If you want to add another confirmation to it, you can add the K2 pivots indicator. So that way you can see the direction of the trend. So right here, like I mentioned before, price is above the pivots, generally it's trending up. Price is below it, it's trending down. If it's just going in between, it's consolidating. So it makes it super easy. So let me just hide this right here. And then you can see here, it's really easy for you to look at. So price is trending up, like way up here. And then it went sideways right here. And then it shot back up before reversing downwards. You can see right here, price crossed down and it crossed the pivots, right? So as it did that, it went into a downtrend. And then you can see here, price came up and then it crossed the pivots in this direction. So in this situation right here, since we have a buy momentum candle right here, odds are price is probably going to reject off the pivot. That's exactly what's happening right here. It's rejecting, right? So it's probably going to reject off the pivot. It's going to try to break this zone. It's going to come up and test this zone right here. And then it can either shoot up, which is that's what I'm anticipating, or it can reject off and come back down and just correct back to the downtrend. But it's in a point where I wouldn't want to trade because it's within two zones right here. Plus, there's no confirmation yet. Until we get this break above here, then I would take a buy. Even if it came down here and we got a sell signal, I still wouldn't take it because I would want it to break below the pivot. So see right here how the price broke below the pivots and then it came below, then I would take a sell right here. So if that happened, or it came back down below the pivots right there, then I would take a sell and then write it down to the next zone right there, like that. I probably would put the TP a little closer, around 35 pips, if I was to take a sell. So, vice versa in the opposite direction, if price, and this is a bullish candle right here, so it might shoot up further. So if it does shoot up further and it closes above here, then I would take a buy. And then I would write it from there up to TP, because odds are it's probably going to come up and test this zone. But then if you have your TP right there, you get out right before it, like right before it rejects off it. Easy as that. But yeah, me personally, just analyzing it as it is right now, it's going into a zone. So me personally, I wouldn't take that trade because it's just a little too risky. But yeah, so that goes my analysis of odd CAD. I'll probably check on it in about an hour and a half once we get closer to the 6-hour candle, so that we can check if there's an entry there. But if I turn on the K2 SRs, there's actually a lot of zones right here. So this is a problem because even if you take a buy right here, it could reject off this zone and come down, or it could reject off this zone, come back down right here, or here, and down there. It really depends. But yeah, so that's it for OddCAD. I'd probably just give it some time, because for the most part, you don't want to be trading within the zones. You want to be trading outside. So you want to trade outside of here. So you can see here price. See, once it comes down to this, when it gets near a zone, your chances are 50-50. You could either reject off it or if you go in your direction. But if you're trading where it's open, like right here, so we got a sell signal, price broke the zone right here, could have entered that sell right there, and then you could have rode it all the way down there before it hit the zone right here. Instead of you worrying about you enter a trade right here and then it can reverse on you at some point soon. So I would just be careful with this trade, and especially with OddCAD. This pair moves a little weird. But okay, let me go to the next question. Amanda's asking, the position is always 1-to-1 even for scalping. Yeah, for me personally, it's always going to be 1-to-1, but you're supposed to adjust your stop loss. Scalping isn't something that you could get really good at right away. It's something that you need to practice, and you need to figure out how to do it properly. So basically, like right here, for this trade right here, my stop loss would have been down here. Trying to see how far is it. 1,300 pips. That's kind of far. So you kind of have, like, if you're going to scalp, you have to have a good understanding as to how price moves. Because, like, for me personally, I would have just put the stop loss at this pivot right here. I wouldn't put it this far because it's a scalp move. If you're scalping, you're trying to get in and out of the trade like super quickly. You're not trying to hold it for the full move, because odds are it's probably going to reverse on you at some point, very soon. But yeah, generally, I would probably put the stop loss down here if you were following the rules, how it was 1-to-1 at the previous swing. But the difference with this is that once price reaches, a certain point, like it reaches halfway, which would be somewhere like right over here. So once it reaches halfway, I'd move my stop loss to that specific point, or I'd move it in profit. The difference with scalping and intraday trading is you have a lot more time to make moves and make a decision how you're going to manage the trade. But if you're scalping, you only have like a few seconds, few minutes to make a move, because the thing is, once price reaches this point, it could reverse right on you like real quick. So in that situation, you're gonna have to think on your feet to how you're gonna analyze the trade. And that's why I never recommend scalping to new traders. Like, if you can't get intraday trading down, then you shouldn't be scalping yet, because if that's difficult for a trader, you have to be like 10 times as fast to scalp, because price is going to move so much faster. But yeah, you're going to put it at a 1-to-1 when you get into a trade, but the key is adjusting your stop loss and adjusting your risk as price moves. That's the whole point of scalping. Like, a lot of people scalp manually. Like, for me, I don't even put a stop loss. What I do is I'll follow it, and once price moves up, I'll move my stop loss right below it. So like right here, as price came down, I would have gone stopped out. Once I see another entry, I could retake it. But again, this is the 10-minute chart. I usually scalp like on the lower time frames, like 5 or 1 minute. So like right here, I don't even recommend 1 minute to new traders. Like, this requires a lot of focus, and you have to really know what you're doing. So if you're going to scalp, the lowest I recommend is 5 minutes. So if you were to enter, let's see, like this trade right here, previous swing would be down here. See, the previous swing is still pretty far. It's like 1,300 pips. It's like way too far for a scalp move. But also, the conditions this morning are not the normal conditions. The price usually doesn't move like this. Again, right here, if you enter this trade, previous swing would have been right here for about, I don't know, 1,100 pips. So as price comes up, like as price pushed up right here, I would have moved my stop loss for profit, or like to break even, because with scalping, it just moves way too fast. So I don't think you should really focus on a one. Well, you'd have to put your stop loss at a 1-to-1, but you're not going to let your trade run, because you can see right here that it reverses at any point. So price came up and then it reversed. So if you're waiting for that full TP, you probably would have gone and stopped out if you didn't adjust your stop loss. But I mean, it all comes with practice. So you're gonna have to practice and see what fits your style. You know, if you want to let it run and then move it to a certain price point, like you have a specific price point where you're like, this isn't a profit, this is like where I want to cut out, then you'd adjust your stop loss there. But me personally, I just manually adjust it. So I manually trail it as it moves up. So if it moves up a little bit, I'll move my stop loss to slightly in profit, and I'll just keep sliding it with it. So as it Amanda's asking, what broker do you use for Forex? I use Forex.com. I used to use TD Ameritrade, but I don't use them anymore. But for indices, I use Hugo's Way for my personal, and then I use FTMO's LMAX broker for that specific account. And those are the only brokers that I use for it. But there's a lot of other brokers too, so it just depends on your account size. If you have a smaller account size, a lot of people use CoinEx. But I think Hugo's Way is fine as long as you don't keep too much money in that account. All right, so let me keep going down. So we got one question from Evan. Evan's asking, how do you determine volatility? You could. It's kind of a hard question to ask because to answer, because you have to like actually know how the chart's supposed to look when it's moving. So let me see if I zoom out right here. You can see here that there is a lot of volatility, right? Because price is moving very fast and it's making big moves. Comparing this right here, there's no volatility because it's barely moving. And then you can measure it. You can see that price is only moving like 200, 300 pips. You compare that to this right here, this is high volatility because price is moving, like thousands of pips, up to 3,000 pips. There's no one way to identify volatility. It just really depends on how the chart looks. So if I take everything off the chart, you could clearly see where it's volatile. It's obviously volatile over here, super slow over here. You can see right here, it's volatile. So this whole area right here is pretty volatile. You can see right here, there's not much movement. This is slow. It's something that you learn as you go, because if you look at the charts more well enough, you'll see that it moves in patterns. So you can see that. Let me see. Price doesn't usually trend very often. So you can see right here, price is trending up. This is a volatile market, and then it consolidates. When it consolidates, there's no volatility there. So it just consolidates, and then after that, it moves back into high volatility. And then after that, it goes into consolidation again. Low volatility. High volatility, low. High, low. High volatility, low right here. And then high volatility, and then low right here. Most of the time it's not very active. It just depends on when you trade it and how you're trading it. So obviously right here, high volatility is pushing up, high volatility down, and then some consolidation. So yeah, it's hard for me to really explain, how I identify it, because this is how I identify it. I identify just by looking at the chart. If it looks like price is moving, then there's volatility there. If price is just sideways, like how it is right now, this is low volatility. I know some people use volatility indicators, but I never really understood how to use that. And I just never found them to be very accurate. So that's why I don't use them. I think you're better off just looking at the chart. And it's not very hard. You just see if there's a lot of movements. If price is moving more than it normally does, then it's highly volatile. If it's moving sideways and it's low, then it's low volatility. Okay, next question from Evan. On the K² SR, when there's multiple resistance lines, how do you determine where you're drawing your boxes? So yeah, let me go back to let me use a different chart because I don't want to mess up my charts. It's a testing chart. All right, so It's on the 4 hour. All right, cool. So right here, your question was asking, how do I determine where I'm drawing my own specific zones? So let me go to a FX pair because it's easier to analyze because I don't trade gold, so I don't know how exactly does it move. But yeah, okay, so using your USD as an example. So generally, I like to have at least a 20 to 25 pip gap between the zones. So right here, it's only 7 pips, right? So if that happens, I just connect them. So right here, it's only 10 pips. This is still one big zone. Right here, it's about 17 pips, still too small. So if there's not enough space in between the zones, I just connect all of them. So right here, I'll connect all of these right here, create a big zone. And the reason for this is because you can't really trade within these zones. There's only like 3 to 7 pips in between. You got to cover spread for about a pip. So technically you only have 5 pips to move in between the zones. And the problem with that is that if you're trying to get in and out of a trade, you might get caught in a trade just because the spread gets you trapped in there because you need to cover spread. You need to have enough movement for you to get in and out of a trade. So right here, this is one big move or one big zone because it's only 17 pips from the next zone. Same situation right here. So right here, this is 34 pips. So this would be enough to create a separate zone. So I would just draw a horizontal line right there. And then right here too. This is kind of a weird pair because the zones are kind of big. Normally they're not that wide. Or there's like at least 2 that are connected with each other so that you can create a bigger zone. But looking down here, see the gap between each of these zones are only about 3 to 5 pips. And then even down here, it's only 11 pips. So in that situation, let's create a big zone. But yeah, that's pretty much it for there. So if you take out the K2SRs, you can see that there is a nice area of zones right there. Evan said, on a Forex commission account, is there a minimum amount I should aim to make a trade? Will I end up going negative if I don't make enough profit? Yeah, so I think I don't know the exact number, but I mean, you should at least be hitting like a few bucks, like a couple bucks to cover your commission and spread. Well, your spread's going to get covered regardless, but your commission's only going to be like, I think it's like 10 cents per mini lot. So if you're taking, or even a micro lot, I don't know. So if you're taking like a 0.10, then you're going to have like a 10-cent commission both ways, or one way. So one way is going to be 10 cents. The other way is going to be 10 cents. So in total, it'll be about 20 cents. So in reality, you only need to make like $1 to, make a profit. And that's going to be like 1 pip. And if you factor in the spread, it's probably like 3 pips max. So like your question's asking, if you end up going negative, you're not going to be super negative due to the spread for your USD or for the commission. It's only a few bucks, and in some cases it's better to get stopped out with a small loss due to technicality rather than taking a full loss. So me personally, it just really depends on how on your risk tolerance. So if you want to go for a few pips, minimum, that's perfectly fine. But it depends on what pair you're trading too. So your USD, the spread's only it's only 0.7. If you trade something with a wide spread, like see what has a big spread, like GCAD here has a 5 pip spread, then you're gonna have to at least hit like 7 or 8 pips for you to make at least a small like break even or small profit. Or even more actually. So you might have to hit like 10 pips or something like that because you need to pay spread one way and then you pay spread the other way as well. So when you get into a trade, you have to go in for a 5.6 loss. When you go out, you also have to pay that spread. You also have to cover at least like 5 or 6 pips before you make a profit. So it's just very risky if you're trading something that has, you know, a high spread. Like this has 5.6. What else has a high spread? NZD CAD has a 7.4 spread. That's super high. 5.2. And for these, like obviously you'd have to, you know, cover the spread plus make at least some profit, like go in and profit a little bit in order to not exit the trade in the negative. But it's something that you pick up along the way. So like, you know, the more you practice and the more you like you get hit with those little fees, that's when you'll understand, you know, how much it costs and then how much you need to actually let it run before you actually exit the trade. But none of our TPs are close enough for that to happen. So, you know, our TPs are generally like about, even TP1 will be about like 1 to 20 pips away. So if that's the case, then you should be perfectly fine. But that's where it becomes an issue with scalping. You know, if you don't have a really good broker with a tight spread, you're gonna get screwed scalping. Like for NZD CHF, you can't scalp this because it's a 5-pip spread. You got to cover like 10 pips. You're basically intraday trading at that point. Similar with, let's see, with like EN. See, EN's 7 pips, so it's like, dude, you got to cover 7 pips one way, 7 pips the other way. It's like 14 pips before you make any profit. So you can't really scalp this. I mean, technically you can, but it's going to be super risky because these are considered tight spreads for me. So if you're using a broker that has, you know, bad spreads, your spread's going to be like 14 pips. So you just got to take it with a grain of salt and like practice and make sure that you're trading the proper pair before you scalp anything. All right, so let me see. We got one more question from Cabbage Kid. Cabbage Kid's asking, what's the K2 TS indicator for? The K2 TS indicator is the K2 momentum indicator. Basically what it does is it indicates when there's momentum swings in the market. So if you get a valid sell signal, so if it's a red signal with a red candle, obviously the momentum swings down. This would be an invalid signal even though it pushes up. But one thing that you have to take into consideration too is the trend. So obviously, you know, price is trending up right here, obviously, right? Just by looking at it. So if you get a signal in the opposite direction of the trend, that's generally just going to be a pullback signal. So it's indicating a retracement. So you see price comes up, you get a sell signal, it's only retracing down slightly, and then you get a buy signal in the direction of the trend, and then it shoots back up. Same situation right here. You know, you get a sell signal, it retraces down a little bit, and then it shoots back up. Instead of drawing the trend lines, you can use the K2 pivots indicator. So you can see right here, it gives you an easy visualization as to how the trend is moving. So price is above the pivots and the pivots are angling and spread out. Obviously it's in an uptrend. So right here, you wouldn't take any sells because this would be considered a retracement. So even though you get a sell signal and it's valid, it's only a retracement downwards before it shoots back up. You get a buy signal, you could take that right there. And then there you go, obviously hit TP. Cabbage Kid said, I understand momentum indicator, but I have TS indicator. Yeah, this is a TS indicator. See K2 TS? It's the momentum indicator. I'm not sure if you have it mixed up or I'm trying to figure out like what yours looks like because the momentum indicator is the TS indicator. Let's see. You might be talking about a different indicator. Are you talking about the pivots indicator? Because that's completely different. This would be the pivots indicator. But the vertical lines is a TS indicator, which is what you're asking for. Unless you're using something else. Yeah, just send me a pic. Because I'm not sure what you're looking at. Is it this? It's not this, right? The pivots. Maybe it's on Telegram. Let's see. All right, cool. So it looks like, you know, we're done for questions right now. So I don't know if anyone else has any other questions. If you do, feel free to put them in the Q&A. Otherwise, I'm probably just going to analyze the charts for any entries off the 6 p.m. Candle close. I don't know if we're going to have any today because, you know, as you can see, obviously volatility has already died down as we get closer to the weekend. But you know, there might be some entries still available. But give me 1 second, guys. I'm gonna step away for 1 second. All right, guys, I'm back. Let's see. Oh, gotcha. Okay, so Cabbage Kid, it's Yogi. I didn't know that was you, Yogi. I don't know. I didn't associate Cabbage Kid with Yogi, but hey, Yogi. So for that thing that you mentioned, you can just take that off. It's not necessary. So basically, here I'll take off all of the indicators over here. Or let me go back to a free chart. So let me take everything off. So you're talking about the KTS. You just go to settings, and then you just take this off. So you have this on right here to show MA curves, but it's not really necessary because it's just doing work in the background. But you can just close that, have it unchecked, and then hit OK, and then it'll take it off the chart for you. That's how you would take it off. I mean, there's no real need for it. I mean, there's a way that you can use it. There's another strategy that you can use, but it's just too complicated. It's not something that I can teach, someone how to do. You kind of have to know how to read the charts to understand how it moves. But it's just doing background work. You know, the signals aren't based off the crossovers because you can see right here, price crosses over all the time. Crossover right here, crossover right here, crossover right here. There's no signal. So it's kind of pointless. It doesn't really give you it doesn't really give you anything, to say the least. So, I mean, if you want them, a lot of people just leave them on, but it's not necessary. Like you don't need them on there. So I always take them off. So Yogi said, what time frame do you see where the trend meter turns red? Most of my cells are when it's blue. So the trend meter is based on the overall trend. So let me pull it up right here. So, depending on your settings, you can't really change it because, I mean, I have my intraday settings here for the 30-minute, 1 hour, 2 hour, and 4 hour. I mean, you're not supposed to change the trend meter down here. The trend meter it's that color for a reason because it's giving you the overall trend on those 4 time frames. They're not supposed to be manipulated for you to make it match the color. Like the whole point of the strategy is if they match, then you take a trade. Like right here, they match and you could take a buy right there. But you're not supposed to, like if you get a sell right here, you're not supposed to try to figure out a way to make it red because this indicator is showing you the overall trend. It's another factor that's used when you determine when to take a trade. Like right here, it's green and green. You could take another buy right there. But you were saying it's blue. So when it's blue right here, it means that it's indecisive. It means that, so I have it set to the 30-minute, 1 hour, 2 hour, and 4 hour. If it's blue right here, it means that price isn't trending in the same direction for all of those time frames. So if it's blue right here, price might be trending up on the 30-minute, 1 hour, and 2 hour, but it might be trending down on the 4 hour. You don't want to trade when price isn't linear. When the trend isn't linear, you don't have an edge of the market because you're kind of just guessing. Like price can literally go either way. And that's why you're not supposed to really force trades, once it reaches this point. Like right here, I can see that it's blue and it's red because this is when the trend started. And you can see it's obvious because as price came down, it turned red right here. But what you're waiting for is you're basically waiting for price to retrace back because you don't want to get in too early. because like say you got in right here and it was blue because you thought price was going to swing down, then you would have gone stopped out right here if you didn't move your stop loss and profit. Because something like this doesn't happen every time. This isn't guaranteed. Basically, when you see it red right here, you're basically waiting for price to swing back up with an opposite retracement signal. And then once you get a sell signal here and it's red, that's going to be a trend continuation because price came up. So to swing down, there's a high and there's a low, and then there's a lower high, and then there's lower low. And then if it swings up right here, it'll be a lower high. And as it comes down, it'll establish another lower low. So you could take another sell if there's another sell signal, somewhere over here. But the strategy is meant that way for a reason. It's a high probability strategy. You're not trying to take any like guesses. You're not trying to manipulate, the trend to take, an entry just because you feel like taking it. Like if you want to take an entry, you can take it, but that's just not how the strategy works. If you don't like using the trend meter, then just use the pivots because it's a lot easier. So if you don't like looking at the overall trend because it's you don't get that many entries, then use the pivot strategy then, because the pivot strategy will give you more entries. So instead of having the overall trend, so like right here, you see the overall trend on 4 different time frames. If you're using the pivots indicator, you're only using the overall trend on that specific time frame. So if I'm trading the 4 hour, this would be an entry right here, obviously. If I'm trading the 1 hour, let's see if there's an entry here somewhere. So trading on the 1 hour, there's an entry right there too. If I'm trading on the 30-minute, there's let me see if there's an entry here. So yeah, if you're using the 30-minute, there's an entry right here too. And then there's another entry down here. I mean, it just really depends. All the strategies are pretty much the same. They just have different entry points. So instead of looking at the overall trend, you're just looking at the trend for this specific time frame. But you can see that they line up. So you can see right here, it's a green and green, right? So this would have been a K2 entry using the original strategy. But if you're using the pivot strategy, it's an entry right there too. It's the same exact entry. So it just really depends on how you want to trade it. But it seems like you might want to like look into the pivot strategy instead, because it seems like you want more entries, obviously. So if you're going to use the overall trend strategy, during this type of market where price is going back and forth a lot, it's not like it trends for some point, but then most of the time it's going sideways. So if it's going sideways, you're not going to get very many entries. So I think you should probably just use the pivots strategy then if you're looking for more entries. But the whole key here is accuracy. You want to be very accurate. You don't want to take like 20 trades and have 10 losses. You want to take like 20 trades and have like 18 to 17 wins. You want to have a high win rate. And the only way to get that is if you're patient with the specific strategy that you're using. But the strategy works the same for all all types of time frames and stuff like that. So it just really depends on your trading style. But yeah, so looks like that's it for the questions. I don't know if anyone else has any other questions. Feel free to put them in the Q&A. Otherwise, I'm just going to go and review the charts to see if there's any entries for the 6 p.m. candle close. But it doesn't look like there's going to be anything. Hopefully there will be. But we'll take a look anyway. So actually, there's going to be one right here for odd CHF. Generally, I like there to have at least an upper zone. So if it breaks a zone like this, I'll go on the higher time frame, and then I'll just pull a zone from that higher time frame. So I'll go back to the 4 hour, and there you go. See, that helps because you can see that it's only 11 pips away. So if I didn't have this zone right there, I probably would have taken a buy once this candle closed, but I might have gone screwed because the problem with this is that if price comes up and hits that zone, it might reject off. So that's why I personally would not take this trade. I'm just going to note it too so I know. 8 hour K2SR. 'Cause Chase asking, what's the tool called for the green red stripes? Jay, are you talking about these vertical lines right here? Or are you talking about something else? You're asking about a tool, so it might be, I think you might be talking about this, right? Wait, which one, Shay? Because you said yeah, but I mentioned a couple different things. Are you talking about this one right here? This would be the long tool. Oh, the vertical lines is a K2 TS indicator. This is the K2 momentum indicator right here. It's the K2 TS. But in order to get that indicator, you have to have access to the K2 indicators. You're not going to be able to find it under, like you can't search it because they're not public indicators. They're invite only. So if you want access to that, you'll have to sign up to the K2 strategy subscription. But you'll find it here. So those vertical lines would be the K² Proprietary Trading System. If you do look it up on public, it's going to have a red lock next to it, so you won't be able to access it. Unless you have access to it. I don't know if you have access to it, chat. I'm not familiar with your account or your account name, unless you have a different name on Telegram. I don't think I've talked to you before on here. But okay, so let's keep going. So this was odd THF. Although this would be a good entry right here for a buy, I wouldn't have taken it because the SR is too close. So I'm gonna have to skip that one. Let's move on to the next one. Odd JPY. This is something that we probably should have taken way down here. So this was an entry right here, actually. So if we took this right here, it would have hit TP. I don't know why we didn't take this trade. Oh, because it was at 2 a.m. So I was asleep during that time. But where's Aaron at? Is Aaron here? See, Aaron would call this trade, but I think there was something going on last night.
Yeah, I'm right here.
Yeah, did you miss this yesterday? The odd JPY?
See, I don't think there was news last night. I probably did miss it.
Yeah, that's all good. I mean, market was moving weird anyway. Oh no, there was a lot of news in the morning. That's why I think we decided not to take it. Right?
Well, yeah, Dad was talking, right? I think that's what. Yeah, I think that was it.
It's all good. I mean, it would have been a good trade, but it could have went. It easily went the opposite way.
Yeah, a lot of the JPY pairs they spiked. They spiked today.
Yeah, they spiked with the U.S. dollar because the U.S. dollar was strong, so the JPY went weak. So this would have been a good entry, but it's all good. I wouldn't take it here because it's way overextended. It's about due for a retracement. So I wouldn't take that. Odd NTD. There's a ton of stuff here. Yeah, it doesn't look like something I would take because there's just too many zones right here. It does have a sell bias too. Let's delete this. So it does have a sell bias right here. I mean, technically, this would probably be a late entry for this specific one. So this could be a late entry, but it just looks really risky. Yeah, because there's another zone down here, so I probably wouldn't take this trade. And I think we took a loss on odd NZD too. This pair is just moving weird this week. I mean, a lot of pairs are moving weird this week. I'm glad to hit a lot of TPs though. Let's see. Andrew said sell on odd JPY on that retracement. So let's see. I wouldn't. I mean, you could, Andrew, but I'm not gonna like. I only take trades if there's a valid entry. Like I don't take trades just because you're trying to predict that price is gonna come down. So if we got a sell signal here, and it came down, and then we got a buy signal somewhere over here, then I would take it because then it would be a pivot entry. But I'm not gonna take a trade just because you think it's gonna come down. Because the thing is, once you enter a sell position here, it's going to shoot right up. And that always happens. That's why I don't take trades unless, there's a valid entry. I don't just take trades off, off luck, because I trade with, I trade with strategy. I mean, you can take a sell if you want and see if it works out, but I'm not going to take that trade. Because like, although it's due for retracement, the thing with currencies is that it's not like stocks or gold or indices. Like, there's no oversold, overbought, because they're two pairs that are paired against each other. Like, if you're trading the Australian index, like just the Australian dollar, then yeah, it could be oversold, it could be overbought, oversold. But there's really no, there's no oversold, overbought factor in here. That's why when people use RSIs on Forex, it just doesn't make sense, because it can't be oversold. Like, the Australian dollar could just be strong for a long time and just keep pushing up. Or, if the Australian dollar is strong and the Japanese yen is strong, it'll just go sideways. It's not going to be oversold, or it just drops down, or if it drops up. Like, one pair has to be weaker than the other, and one pair has to be stronger than the other. And that's how currencies work. If you want to look specifically, you can always open the index. So you could do AXY, the Australian dollar index, and then you could pair it with the JXY, which is the Japanese currency index. So you can see, let me just take off the pivots, it's kind of confusing. So if you look at this right here, you can see that it's really clear. Like, you can see that the Australian dollar is going up, right? So that's why price is going up. The Japanese yen right here is it was going down, but now it's pushing up a little bit. So if they both push up, then that's when price slows down, because you can't have two strong pairs going against each other. If they're strong pairs, it's just going to go, if they're both strong, it's just going to go sideways. But if this goes up and this goes down, then you'll see price go up. If this goes down and this goes up, you'll see price go down. It's not like stocks where you're just following one thing. Like stocks, if the stock's weak, it'll go down. If stock's strong, it'll go up. The thing with currencies is that it's paired with another pair. So you can't just base it off one specific pair. You kind of have to look at both. But yeah, I mean, personally, I don't think, I mean, there's no indicator showing that, or any catalyst telling you that price is going to be coming down. So me personally, I would probably just hold off, unless you get a valid entry, like I mentioned. So if you get a valid entry, then yeah, you can take it, but I wouldn't take it right now. Dot said, whether currencies move inversely of each other, like US dollar and Japanese yen, like you mentioned. There's a lot of different pairs. Like AUD-JPY, this usually moves opposite too. Here, let me see. Let me see if I can pull up the, because I have it here. All right, so if you search up my FX book, FX correlation, you can go on here and then you can see what correlates and what doesn't. So, right here, you can see market correlation, AUD-CAD. You can see that AUD-CAD matches with AUD-JPY. It goes off. It doesn't really match AUD-NZD very much. Your AUD, your JPY is 69% correlation. USD-CAD is complete opposite. And UJ is complete opposite. You can see all the pairs here. So this would be a better, place for you to look, because it's really going to depend on the specific pair. So, depending on the pair, you can see what pair correlates here, what doesn't. You can change the time frame to, like, I don't know, 30-minute, but they're pretty much going to be the same, unless you want a super high time frame, like monthly. Obviously, it's going to be different. But if you go like on the 1 hour or even the 4 hour for intraday, you can see, how they move. Yeah, so let me go to the next question. Chay's asking, can you look at AU? So yeah, let's pull up AU real quick. So I already looked at AN. There's no correlation there. I mean, there's no entry there. AUD USD. So I have this mark right here, orange, because I've been watching this pair actually for a long time. I'm waiting for it to break above. So once it breaks above, then I would take a buy, because I'm anticipating it to shoot upwards after it breaks that zone. And there's a lot of different confirmations. You can see the trend meters is green down here. So obviously it's an overall uptrend. You can see from the pivots, it's in an uptrend. The only problem is that it's at the K2SR. It's at a resistance right here. So the problem with this is that it might reject off and come down. But if it comes above it, then I'm anticipating a strong shoot up because the trend is so strong upwards all around. And there's so many catalysts and confirmations giving you reason to take a buy. But me personally, I would wait for it to close above. Let me see if there's any zones up here on the 8-hour. So there's no. The thing is, when I take a buy or if I take a sell, I always want to know where's the resistance at. Because the last thing you want to do is take a trade, and then you're right at resistance, whether it's on the weekly, the monthly. I mean, it doesn't matter if there's a resistance there. It'll probably have some impact on your trade. So there we go. There's a weekly resistance right there. I'm gonna go back to the 4-hour. And then I'll turn off the SRs. And yeah, there's a lot of space here. So Shay, if you decide to take this trade, I'd have to wait. I wait for it to break above this zone right here, because once it breaks above this zone and closes, it has free movement to the next zone right here. So when it does that, you have a huge move upwards at a little less, 31 pips. I probably put like CP1 around 31 pips. But yeah, it's pretty much what I see happening if price breaks above that specific zone. But obviously it's going to take some time. So yeah, let me close this. Yeah, that's odd USD. It's in a strong bullish uptrend, and it has so many confirmations giving a strong bullish uptrend, but it's at resistance. So I'd have to wait for extra confirmation before I take a trade, because I don't want to get into this trade and then it reverses on me. Let's see. So yeah, we looked at that. Parmon's asking, sir, how gold and silver moves? I mean, all assets move, similarly. Gold moves a little different because it kind of moves similar to like US 30 because they're highly volatile and they're super affected with, COVID and the Fed. And the Fed spoke today. That's why it was moving so much. But gold generally goes up. So gold is the closest asset to gold would probably be US 30, because I'm gonna go to a chart that I haven't touched because I don't want to mess up my charts. So if you look at gold on a long-term, time frame right here, you can see that gold generally goes up. So if you go on the daily, it goes up. It only goes down every so often if something happens in the world where the dollar is strong. But for the most part, it usually goes up. And the reason it's up right now is because of COVID and because the Fed keeps printing money. So, when the Fed keeps printing money, the US dollar, the value of the US dollar goes down. As the value of the US dollar goes down, gold prices go up. So generally, overall, it's usually in an uptrend. But after today, obviously it's been coming down. But there's no specific way that gold moves. I mean, you have to analyze it as it is. So if you're trading it on the 4-hour, then you have to analyze it on a daily perspective. If you're trading it on the weekly or the daily, you have to look at it from a long-term perspective, where obviously it's going to continue up. It just really depends on how you analyze the chart, because it makes a huge difference if you're analyzing it on the 30-minute versus analyzing it on the daily. Because on the daily, you're planning on holding this for days, if not months. And it's probably going to go up if you hold it for that long. But if you're trading it on the 30-minute, it's in a downtrend right now. You're going to try to take a sell. So Parma, I think you just have to, figure out how you want to trade, and how everything's done versus, there's no one way to analyze it. That's what I'm trying to get across to you, because you're asking, how does it move? they're going to move differently depending on the time frame you're trading on, and how you're analyzing it. Because if you're analyzing it on this, obviously you're going to only take bullish moves if you're trading it long term. If you're trading it short term, you can take moves in both directions. And same difference with silver. Silver and gold are pretty much the same thing. Silver is just like gold's little brother. It does the same exact thing, but it's not as valuable as gold, obviously. But if you look at it on the higher time frame, it's also going up. So it just really depends on how you want to analyze it. And you can analyze it pretty easily, with the K2 indicators, just analyzing it the same way that I do. But yeah, so I mean that's it for gold and silver. For the most part, they do move bullish, but if you're trading it on the shorter time frame, I wouldn't only buy, because right now it's currently coming down. Anonymous attendees asking, how do you find perfect entries for US 30? So for US 30, we only use one. Well, me personally, for the daily entries, I only use one strategy. When I'm scalping, obviously I use the pivot strategy, but the way that the daily strategy works is, I'll just type it up right here. It's super simple. Stock exchange open, which is 6:30 savings time. And number 2, identify a valid K2 signal. And then 3rd, you can enter on the open of following candle. So yeah, so I mean, this is pretty much it. It's super simple. So let's just rewind to today's entry. I didn't call today's entry because of all the news, but even with all the news, you can see that it's still very accurate. So 6:30 a.m. So right here, we're going to be looking for trades. So after 6:30 a.m., which is right here, yeah, after this happens right here, you can look for entry. So any signal after this time, you just take the entry. It has to be a valid signal though. So an example of valid signal is if it's a green buy candle like this with a green bullish candle. So if it's green and green, that's valid. If it's red and red, that's valid. Green and green, valid. Red and red, valid. If it's opposite, like, let's see, like right here. So it's a red sell signal with a green bullish candle. That's invalid. Again, right here, it's a green bullish, a green buy signal with a red bearish candle. If it's green and red, that's invalid. Red and green, invalid. Green and green, valid. Red and red, valid. Easy as that. So basically the way that the strategy works is we're waiting for momentum to give off after the market opens. So right here, this is when the New York Stock Exchange opened. You can see a strong bullish move upwards. So the thing that we're looking for now is the first valid signal. Take off this. So right here, we have a valid sell signal, right? And it's valid because it's a red sell signal with a red bearish candle. So once we have that, we'll enter on the open of the falling candle, which is right here. Generally, we like to trade for a 1500 pip move. So I'll put 1500 pips right there. And then we let it run. And there you go, full TP. It's that simple. And the way that this strategy works is we're basically just trying to piggyback off the big players in the market. We're trying to piggyback off the institutions and the market makers that are actually moving the market. So as you can see right here, a lot of people try to catch moves as soon as the market opens, which people could have made money off here. So once the market opened, people could have taken buys right here. They could have rode this up. But the thing is, people get faked out because they, like, the institutions and market makers, like to push price in a certain direction, and then they have all these people that get in late because they want to FOMO in, and then once it reaches a certain point, they dump price or they move in the opposite direction. That's exactly what happened here. So this is why we don't get caught in these little traps, because we know the direction of momentum because we have the momentum indicator. So pretty much right here, you can see that, the institutions were tricking people to get into the market. So they push price up a little bit. There's all these people jumping in because everyone's like, oh crap, we're making money. Everyone buy. So everyone buys. And then once it gets to this point, they drop it down like super hard. But the thing is, we don't jump in right there, because we could have jumped in right here too. And we could like, people get faked out in both directions. So price goes up and then they see this drop, right? So if you see this drop right here, you're probably thinking, oh shit, price is probably coming down. So people are going to enter their sells right here. And then what happens? They get stopped out, because the institutions like to fuck with people like that. Like, they mess with people because it's psychological. People don't have the edge that we have because they don't have the K2 indicator. And I created this indicator. So, we're the only ones that have it. I'm the only one that owns this indicator because I created it. And basically what we're doing here is, we're trying not to get caught in any of these traps. What we're doing is we're waiting, being patient for the momentum signal to actually give off the direction of momentum. So basically right here, this is the momentum signal. This is basically telling us like, hey, the institutions and the market makers are pushing price in this direction. So you know what, let's piggyback this ride and let's just ride the wave with them. So what we do is we set up our trade right there. And then I set it up to a specific parameter of 1500 pips, because generally that's how much it moves after the momentum has been identified. So once it's been identified, like, we're not trying to get greedy. We're not trying to catch like a huge move. We just want to get in and ride that wave and make our profit and then hop out. So right here, price comes down, you ride the wave, don't get greedy, we exit the trade. Because the thing is, if you wanted to ride this all the way down, look what happens, price comes up, and then you would have been screwed. Because if you held on to that, it would have went into the negative. So, that's why our requirements are super strict. They're straightforward. You just got to follow the rules. If you follow the rules, you could be successful at it. It's super easy. But, let's go back to, let's see yesterday's entry. So actually there was news yesterday. So let's skip yesterday's. And then let's go to the day before. I think there was one somewhere over here. Dot said, use the US 30 strategy the same way during London session. So me personally, I don't, but we do have other people in K2 that do use it and they do make the calls. That'd be Marcus and Aryan. They both make those calls and it's super accurate. So let me see if there's a, I think they took one over here. Okay, so same situation. So instead of looking for trades after the New York Stock Exchange opens, we would be looking for entries when London opens, and London opens midnight my time. So that'd be midnight right over here. And like I mentioned, we don't enter trades right when the market opens, because that's when the institutions are manipulating price, or they're not manipulating price, but people who put in orders during the off hours, because when the stock market opens, there's a bunch of orders that are put in place overnight, and then once the stock market is officially open, the orders go through and it pushes price in a certain direction. So like right here, price was going down and then it came up, and then the market opened and price just shot down fast because all the orders came in. But like I mentioned, you take the first valid K2 signal after the specific time. So we don't take the opening candle, we don't take the midnight candle, we take the candle after it. So the first signal that happens after it, which is right here, is a buy signal, right? So once you take that right there in our long position, like we did earlier, same situation, 1500 pips, because I've identified that that's a sweet spot for how much price moves during one entire session. And then if we let this run here, it pulled back a little bit, but eventually look what happens, straight to TP. And that was before the New York Stock Exchange even opened. Look, the stock exchange didn't even open yet, and we hit TP right before it. So people like Aryan and Marcus, they took this trade during London, they hit full TP. They took the trade again during US session right here, again, full TP. Because the thing is, we're reacting to price. Like, we're not predicting where price is going to go, because that's impossible. You can't, people try to predict price all the time, but it's not possible, because, price could be going, like right here, price was going down, right? It was going down pretty nicely, but whatever the institutions want to do, they'll push price wherever they want to push it. So there's no point in predicting. Like when I see people predict prices like weeks ahead or days ahead, it's kind of pointless because anything could happen at any day. Like literally on one day, it looks like price is going up, right? But if the institutions are like, nope, we're gonna reverse price today because we want price to go this direction, they can push price in that specific direction at any point in time because they have the money to do it. And that's what happened here. You know, price was going down and then it shot up. Or right here, price was going down for a long time. So it was going down for, look, it was in a downtrend for a long time right here. And that's why I don't like to trade price action, because price action, you know, that type of strategy likes to predict what the next moves are going to be. For me, it's like I wait for the momentum. When I see the momentum, then I ride the wave. I don't want to predict that price is going to go in a certain direction. I just want to wait for, you know, the opportunity to rise, and once I have the opportunity, I'll just ride it. But yeah, if you took the London position right here, you would have made 1,500 pips. You took the US session right here, you made another 1,500 pips. You hit it both ways. And the whole key here is like risk management. Like there's no need to get greedy and like hold on to the trade for so long. You can just, you know, enter the trade when you have an edge, make your money, exit, do it again for the next session. There you go, another win. And yeah, that's pretty much how that strategy works. Super simple. But let's see. All right, honest. So yeah, that's pretty much it for US 30. This is the main strategy that I apply. If you want to use the other strategy, I mean, there's a lot of other strategies that you can use too. But you know, this is what I use for the daily. This is what I use for the signals. But you can use the pivot strategy as well if you want to scalp. It's just really up to you. You know, I give you guys all the tools. I give you guys the blueprint on how to trade, how to be, you know, a successful trader long term. And it's your choice whether you want to, you know, trade my strategies or trade your own strategies and use my indicators to improve your own strategy, which is what a lot of people do. You're not forced to, you know, trade my specific way. You can trade any way you want, but the indicators will always give you an edge in the market because, you know, if you know the direction of the trend, that's like one edge. You know the direction of momentum, it's another edge, and then use the K2SR to know where not to trade. There's like your full trifecta right there. You have everything you need to be a successful trader because if you know the direction of the trend, you know to only trade in that direction. If you know the direction of momentum, you know when to enter a trade. And then you have the K2SR where it tells you where price might reject from. That'll give you confirmation to, you know, don't trade at the specific price point because price might reverse on you. And that's pretty much all you need. You know, keep trading simple. A lot of people like to overcomplicate trading, and you know, they try to use all these like random terms and random strategies that they're hard to understand. But in reality, price can only go one of two ways. Price could go up or price could go down. There's no need to overcomplicate it, because if you trade one way, you're either going to win or you're going to lose. Same situation with pretty much any other strategy. You don't have to like add so many extra things on there. Marcus said, what's the K2SR specs? Can you click on the indicator, please? Yeah, Marcus. So for my K2SR indicator, I have it set to 100 bars back and then 500 length. The reason I have this length is because I want the indicator to go across the entire screen. Because I think on, so if you have it on default settings, it's like at 100. So you can see that it gets cut off, right? I like it to go across the entire screen, so I put 500. And then you can change the bar length as well if you want, you know, farther data. If you want the data to go like way back. But me personally, I think 100 is fine if you're intraday trading. There's really no need for you to go farther than that. But I mean, you can if you want. And then for the other K2SR indicator, it just has the length. It's the same thing as the SR. I have the same thing to 100. It's really up to you how you want to place it. But yeah, those are the settings that I use. There's a lot of US 30 signals. Okay, so let's see. Dot wants me to check out KJPY. Let me look at that real quick. And then Angel, I see your question for GJ, so I'll look at that next. Sorry, I got hiccups. Let's see. KJPY. All right, cool. So let me just make sure my zones are on properly. All right, so I got my 4-hour zones right there. Got my no 8-hour zone there. I'm gonna take this off. What else we got here? All right, this is the daily. So it looks like there was an entry right here, but we didn't take it because there was news this morning. There's a ton of news. So KJPY, technically, there would be an active trade right here. And it looks very bullish. So it looks good, but let me see if there's news. I think there is news, right? So yeah, it's very strong bullish. There's news at 2 a.m. it looks like. Let me look over real quick. Yeah, so it looks like there's news at 5:30 a.m. for CAD. Yeah, you know, we're probably not going to trade. Well, we'll probably trade tonight, but tomorrow morning, we're probably only going to call like one trade because there's just too much news tomorrow. There's news at midnight for CHF. That's going to affect a lot of pairs because it's a safe haven currency. Again, at 5:30, there's USD and CAD news. There's like really no point in trading tomorrow. And then there's yeah, US news right there. And then the Jackson Hole Symposium is tomorrow too. So there's a ton of news tomorrow. You know, if I don't find any trades at 6 p.m., then we're probably not going to call anything for 10 p.m. because there's just too much news tomorrow. But hopefully we find something right now. But yeah, looking at CAD-JPY, it looks like it's still bullish. The only problem that I see, you know, approaching is that it's going to get close to this K2SR zone right here. So the problem with this is that once it reaches that point, it's probably going to reject off it. You know, you don't want to get caught in that. Let's see. Let's see. Yeah, so where price currently is. Dot, are you in this trade already? Because if you're in this trade and you're in a buy, it looks pretty good. You have a pretty good cushion right here. You have 30 pips to reach until it hits the K2SR. But I think once it gets close to this point, I would move your stop loss really close, like right here. So that if price was to, you know, come up, test this, and then reject off, you could have locked in this much profit right here, which is about, let's see, it's about 33 pips, 34 pips, give or take, which is pretty good. So, you know, depending on, you know, if you're in this trade already, if you're not in the trade, I wouldn't take it because it's already getting, I mean, it's not getting close, but it's going to get to that point, you know, in X amount of time. It's not really going to, I think it'll happen sooner than later. It'll probably just spike up. Because it only has about, it'll spike up like 20 pips. And then you don't want to get caught in that. But also the problem with this is, like I mentioned, it's Thursday. So, you know, a lot of people are out of the market already. So the volatility is going to die down. Plus, there's a ton of news coming up tomorrow. So there's a ton, you can even just look at the chart right here. There's a ton of news. There's news right now, actually. JPY news, it looks like. And then there's news again tomorrow for a CAD. Let's see. I'll be right back, guys. Fuck, shit, my bad. Let's find water. All right, cool. So let's see. CAD-JPY. So yeah, I mean, pretty much CAD-JPY is strong bullish. You can see the overall trend is bullish right here. Plus the pivots are indicating a strong bullish move. Plus we have a buy momentum candle right here. So, you know, obviously if you follow these candles over here, it's a valid buy entry right here. You can see the momentum push up again right here, push up. So that's exactly what I see happening right here too. You have a valid buy signal right here. So I anticipate it to push up pretty much to the next zone over here. So if you want to take a buy and you want to scalp it, you know, feel free. Let's go on the shorter time frames. On the shorter time frames right here, you know, these are valid pivot entries. So this is a valid pivot entry right here, but it looks like, you know, we would have missed it at this point. And there was another one right here. So it looks really good for a buy if you plan on taking it. But me personally, this is too far from entry for me. It's 12 pips from entry. So the thing is, if I enter this trade with a standard lot, I'm already giving away like, was it 12 pips? I'm giving away like 120 bucks. So it's just not worth the risk, because what I would hate to happen is I enter a buy right here, and then it retraces back to entry, and I'm like, shit, I should have just waited. And that usually happens. It's very common. So that's why I wouldn't enter market right here. I mean, if you really want to enter, then you could put a buy limit right here and then enter at the actual entry point. But like I said, I just wouldn't enter it because it's already made its move, and it probably would have hit TP1 already somewhere around here. So technically, you probably should have been out in profit at this point. So it's just too risky. All right, Angel. So we'll look at GJ real quick for you. Actually, give me a second, guys. I'm gonna scan through the charts real quick. I'll see if there's any entries, and then if I see anything, then I'll just mark it. So I'll be ready once. Man, it looks like there was entries for both CAD JPY and CHF JPY. So both CJs, there is a same entry. So that gives even better confirmation, because if this is giving off a buy, this is also giving off a buy. Also is odd JPY. The JPY is just really weak, it seems like. So, I mean, if you want to take those trades, they look like good trades. But me personally, it just seems a little too late for me to enter that. So I probably wouldn't take it. See what else we got here. Euro odd. I would take this trade if it closed below here, but it hasn't yet. So let me keep going down. This year CAD right here looks like it'd be a valid sell entry, but it just looks a little risky right here. Yeah, I mean, this might be a good late entry. I forgot why I didn't want to call it. It just looked risky to me when I looked at it earlier. I need to turn off those signals. I'm not even trading US 30 right now. There you go. Turn those off. Yeah, I might call this as a late entry right here. So I'm just gonna mark it. It looks good overall. The only problem is there's a lot of news in the morning, so I'm just gonna call this right now actually, because it does look like a pretty good entry. So this is pretty much how I call the trades, guys. It's super simple. So if you want to trade exactly how I do when I call my signals, you just need access to the indicators, and you could learn the same exact strategy that I use when I call these entries. So basically like that. I just copy the same template that I've used in the past. Like there's no hiding the ball here. Like literally all the trades that I take are the same strategies that I teach you guys. There's nothing different. Like if you could identify the same trade, like obviously I could do it way faster than you because I've been doing this for like years. Not this specifically, but these are my strategies. I've developed the indicators, I developed everything, the strategies from the ground up. So I know everything like the back of my hand. But you can do the same thing if you practice enough, because there's a lot of people in the group that are getting really good with the K2 indicators and strategy, and they were like brand new traders when they joined. But there we go. We have a sell stop entry for your CAD, and I'll share that to the other premium group. So if you're in the premium, you guys have the trade right there if you want to take it. It does look good, so let me just put a sell right there. And then let me place some alerts there. All right, so this is gonna be TP1 for 20 pips. And whenever I send the updates, like TP getting hit, it's because I get an alert. Like I'm not here staring at the chart all day waiting for things to get hit. I set alerts and I just forget about it. So when it's filled right here, I'll know that the trade got filled. And this is how I trade. Like I like a lot of people, they stare at the charts all day. I literally don't do that. I take the trade, I set my alerts, and then I go on with my day. Well, I don't really have much to go on with because I'm in the chat answering questions all day, so I don't really, I'm technically still here, but I'm not staring at the chart like 24/7. I just take the trades, and then that's about it. Let's see. I spoke out all my alerts there. So if price, once price reaches entry point right here, I'll get an alert. It'll say, the trade's failed. If we get TP1, I'll get an alert. TP2, full TP. Easy as that. So Angel said CJ showing a 30-minute momentum. So let me go on the 30-minute real quick. See what you're looking at. I'm looking at it, Angel. I don't see it here. Are we looking at the same pair? The last momentum entry was actually right here. It was this morning at 6 a.m. So this would have been an entry there. It would have hit TP. Let's see, Angel said CHF JPY shows a buy momentum on 30-minute momentum. Yeah, I don't know if we're looking at a different pair, Angel, or unless you're looking at CAD JPY, but that happened earlier too. I just don't see anything currently. I'm on it right now. Technically, the next signal would be a sell signal because we already have a momentum swing upwards. So the only way that it could give another signal would be in the opposite direction. Unless you're looking at something else. All right, cool. Angel's gonna send me a screenshot. Unless you're using different data, are you using different? See that might be the thing. You might be looking at some other data. So you might be using FXCM. But see, looking at this too, it's not lined up with it. Let's see. All right, Angel sent me a. Oh yeah, it's the same one. That's so. Yeah, you're using different data. So I don't recommend using FXCM data. I've done my back testing on it. Their data is kind of off. It's not very accurate. I mean, it's accurate, but it's not the same. I think Forex.com still has the most accurate data. Since they're the bigger company, they're a subsidiary of Gain Capital, which is one of the biggest brokers, I think, worldwide. So, yeah, using FXCM data, it still works, but you can see here that it's, I don't know, I feel like it gives you a lot more false signals. Like this is a loss right here. This might have been a loss right here too. So I wouldn't follow, that specific data. I mean, you could if you want, but me personally, I stick to, so if you type in the pair right there, it'll show you which data to choose. And I like using, the biggest company, because the biggest company will have the most money, they'll have the best data. So I use Forex.com data. And yeah, it looks fine right here. I mean, there's not, see, you can see that it's a huge difference because on FXCM, there was a buy signal here. But for Forex.com, the buy signal was way down here. So yeah, me personally, I wouldn't go with that specific trade. That was an issue that I had before too. Like when I first created the K2 strategy and the K2 indicators, I went and I tested them on every broker. I tested them on FXCM. The reason I liked FXCM when I started is because they give a lot of signals. They give way more signals in Forex.com. But the problem is that they give a lot of false signals. So, although you got a bunch of entries, a lot of those entries weren't good entries. And me personally, I prefer to just go with what's accurate. There might not be as many entries on Forex.com, but most of the time they're usually pretty accurate. I've checked Wanda. They're kind of similar to Forex.com because they're both big US regulated companies. But FXCM, they're all right, but I wouldn't recommend using them. But yeah, so let me go back to the charts real quick and see, because I was still analyzing for any entries. So I was on your CAD, your CHF. I'm just going to zoom through these real quick because I don't think there's going to be very many entries. There was an entry here, but it's a little too late. The entry started right over here. So I'm not going to take that. It's too late. Same with Euro NZD. See, there was a lot of entries that happened overnight, but I didn't take them. So this was 10 a.m. yesterday. I don't know what happened with this. We probably should have taken this one. Yeah, that'd have been like 100 pips and 100 pip win. Actually, I think we might have taken this trade, no? Let me see. Euro NZD. Yeah, actually, we did take this trade. I was like, we should have taken this trade, but we did take it. So we took it right here, hit full TP for 100 pips. It's a great entry. Let's see what else we got here. Euro USD. This trade pissed me off because we took this trade right here, and then it hit our stop loss like slightly, and then it shot straight to TP, which is super annoying. It happens all the time. Let's see, Dot. Okay, Dot said I only see K2CS backtest script indicator when I add it. Hey Dot, did you sign up for the subscription? Do you have access to it? Because in order for you to have access to the indicator, you have to have an active subscription. I'm not sure what your name is on Telegram because I don't think I've talked to you before on here. But yeah, if you don't have access, it's going to show an error. You have to have a so you go to indicators and you go to invite only scripts. You can't search it because it's not a public indicator. You have to have an active subscription, and then you'll have this option right here where it says invite only. So if you try to search it in public library, so you're gonna get these locks, and a lot of these aren't even the K2, they're not K2 indicators. They just have the K2 name. Wait, that's weird. Hey, Dot, so DM me if you're using the rest of the K2 indicators. Yeah, that's weird if you don't have access to it, because you should. Send me a DM on Telegram with your username, and then I can check for you. But here, let me see. Yeah, I'll wait for you to send me a DM, and then once I get a DM, I can check for you. But I don't. You should have access to it, because if you have access to one, it gives you access to all of them. So you might be looking at the wrong indicator. Are you looking at the K² Proprietary Trading System indicator down here? Because it would have to be, that specific one. It's not called K2TS. Oh, that's probably why you're confused, because you're looking for K2TS. You have to look for this one right here. It's a K² Proprietary Trading System. It just stands for, TS stands for trading system. So this is just the full name for it. I think that might be the issue, because nobody else has access to the backtest script. That's a admin only script. And the alerts one, that's used for our testing. It's not really used for, it has no use for you guys because it's only used for testing stuff. But yeah, let me just scan through the charts real quick because the time's about to run out soon. Yeah, I think that's about it for the entries. NZD-CHF, this technically would be a good buy entry, but I'm not going to call it because this is there's news coming up in about an hour, it looks like, or shortly, very soon. Yeah, no problem, Dot. Oh, perfect. Yeah, sorry about that. I know I get kind of confused because it says K2TS there, but it's supposed to say it's a short-term phrase for it. TS just means trading system. Perfect. All right, sounds good. Yeah, so I'm gonna get back to Angel's question. She's asking about GJ. So I don't see any other entries here. There's a couple NZD pairs over here, but it's too late for that one. It's too late for that one too. Yeah, we missed a couple entries. It was because of the news and stuff. Or that like this entry happened during the swap spread, so that's why we couldn't take these trades because this closed at 3 p.m. at 2 p.m. That was during the swap spread, and that's why we couldn't enter this late. But unfortunately, it's all right. Like we had a pretty good amount of wins this week already. But let me go to GJ for Angel. All right, so looking at GJ right now. Pips is asking what indicator are those green and red lines? The green and red lines are the K2 TS indicator. It's basically the K2 momentum indicator. What it does is it identifies momentum swings in the market. So if price is trending up and you get a momentum swing upwards, you could take a buy. And you would have locked in 136 pips. And then same situation right here. I mean, you wouldn't take this trade because it was in the zone, but if you wanted to take it, you're just ignoring the zones. Another 130 pips right there. And then another one right here, another 130 pips. And then again right here for another 130 pips. I mean, it's so easy, literally. Another one right here, another 130 pips. Once it hits full TP. Easy as that. So, okay, so let me check out GJ real quick. So I already have the zones drawn out for me. Let's zone out, see if there's any upper zones that we can look at. All right, so the problem with this trade is that it's right at resistance. Let's draw this right here. Let's go back to the 4 hour. Turn those off. So Angel, this trade actually rejected off resistance for a triple top actually, because well, I mean, I don't know if it's considered triple top, but it's tested it 3 times. So it's tested it once, came down, tested it twice, came down, tested it a 3rd time, came down. So the problem with this trade is that the yen is weak. So you're anticipating it to shoot up. Also, the overall trend is bullish as well. You can see down here, it's trending on 4 different time frames over here. And then the pivots are also giving, a strong trend upwards. The only problem is that it's at resistance right here. So you don't want to take this trade yet because it could reject off it like it did right here. It's already rejected off it 3 times, 1, 2, 3 times. So you would want to wait for price to break above it. So if price breaks above it, above here, then you can take a buy, because then you can ride this, as far up as you want. But this looks like a very strong resistance. Also, this is the daily resistance, so it's definitely a strong resistance. So this is daily resistance. So I mean, me personally, I wouldn't take this trade because it's just too risky. The risk to reward is just not worth taking this trade. But it does look like a good buy. So if it breaks above it, then yeah, go ahead and take it. But if it doesn't, then I would just sit tight and wait for it to break, because like I mentioned, last thing you want to do is price reverses on you and you're screwed. And that's going to be horrible if you enter at the worst time. I mean, this would have been good if you entered down here, because it looks like this closed above the zone right there. So if you entered from right here, you'd have locked in 60 pips, easy money right there. But yeah, other than that, I wouldn't take this trade because it's right at the daily resistance. It's just way too risky. Pips 2x is asking who or what do I subscribe in order for me to use that certain indicator? Here, I'll post the just look in the chat, Pips. I'm gonna post the links to sign up. All right, so it's right there. Just look in the chat, and it has a link right there for. We do have the trial going on, or you can just go on our website too. So if you go to our website, k2trades.com, just scroll down to the bottom, and then we have the $50 trial right here. So for $50, you get access to the K2 indicators, the K2 strategies course. So if you have, let's see. Yeah, this is the K2 strategies course. So once you have access to that, you'll have access to the indicators, you'll have access to this course, and it has a breakdown of how everything works. All the indicators, how I trade, how I do everything. And then on top of that, every strategy. So the intraday strategy, the momentum strategy, the scalp strategy, the pivot strategy, the daily US 30 strategy, pretty much everything here is explained. And then if you go down here, we have all the webinars right here posted from, me, Honest, and then I think we have some from Wade as well, who does our indexes. And then if you want to look at all of our results, we have all the trades here. So if you click on that, you can see it has all the trades for the month, the weeks, indices, Forex, by the week, and then each individual trade too. If you want to go and back test everything, you can see we had a really good month for June beginning, or May actually, yeah, May into June. And then you can see it has, every single trade there. If you want to back test it, see entry points, exit points, profit loss, and all that stuff. Oh, and Aaron too. Aaron's got his webinars. Let me see if I can find them. Oh man, where's Aaron at? I forgot Aaron was still in here. Still in here?
Yo, yeah, I'm here.
I thought you left, bro.
I'm here to just trying to learn, just like everyone else.
Trying to learn. But yeah, Pip. So if you want to get access to it, go to our website or go to the chat. It has a direct link there. And then yeah, you'll have access to all the K2 indicators, access to the entire K2 course, access to the K2 premium groups right here, where I share all my trades. So if you want to copy, like I use the same strategies too, but if you want to copy my trades and you don't want to, or if you want to use it for confirmation to, find the same exact trades, it'll be, I'll post my trades here and then you can go back and use the same strategy and you'll be like, okay, cool. Same thing lines up. And that's what most people do. Most people, they just use the signals to confirm their own trades. And then if they match up, then they take the trade. But yeah, so I think that's it, guys. I don't have any other questions here. And it's just about to be 6. So if you guys have any other questions, feel free to put them in the Q&A. Otherwise, I'll just give it a few minutes. And if we don't get anything, then I will be available in chat. But otherwise, I'll hang out for a little bit, give it a few more minutes, and just see if there's anything else to enter. So see if our your cat's about to fill. Yeah, it hasn't filled yet. So I do have an alert here. So when it does come down, it'll fill. But yeah, guys, if you guys are new here, just remember I have this every Tuesday and Thursday from 4 p.m. to 6 p.m. Pacific Daylight Savings Time, which is my time. It's LA time. Yeah, if you guys have any other questions, feel free to reach out on Telegram, or you can reach out on social media, any other way that you guys want to reach out to me. Otherwise, I'll be available all day today. But yeah, so I'll talk to you guys later. I'll catch you guys back in the chat, and I'll have this posted on YouTube shortly. All right, guys, thanks for showing up.